So, explain how the decision to close this operation, so see the words closing and operation should make you think of maybe discontinued. How it should be treated in the accounts for the year ended 30th September 2010-2011. Also put some numbers in. Okay, so let's do the first bit then. Let's do September 2010. Let's have a look what's going on. So, they've been having substantial losses at a furniture making operation, which is treated as a separate operating segment. Okay, separate operating segment means it can become part of a discontinued because it's a major line of business. Okay, let's keep reading. The company's year end is September, we know that. At a meeting before the year end, the directors decided to close down the operation after the year end. Okay, so in September 2010, it's not discontinued, not yet. Okay, they've made their decision, but it's not discontinued until afterwards. Okay, then it's going to dispose of its non-current assets. Affected employees were informed of the decision and a press announcement was made immediately after the meeting. So they've told everybody, so they've had a decision at board level and told all who were affected. Therefore, they can now create a provision because they now have an obligation. But what can we provide for? That's the question. So have a look. Before the year end, the factory had a carrying amount of 3.6 and will be sold for 5. But it won't be sold until next year, so we're not going to bring in anything yet. On the same date, the plant, and you might want to put that in actually, you might want to put the increase in value of the factory not recognised until sold, which is next year. Because I'm trying to get 10 marks, I'm trying to write down as much as I can really, trying to explain my thought process. On the same date, the plant had a carrying amount of 2.8 million, but will only be sold for 500,000. So therefore, it has been impaired. So there's an impairment of 2.8 down to 0.5. So impairment of 2.8 down to 0.5, an impairment of 2.3 million. That will be shown in the income statement in 2010. Keep going. Of the employees affected by the closure, the majority will be made redundant at a 750,000 cost. I can provide for that then, so provision of 750,000 redundancy costs because the obligating event has already happened. The remainder will be retrained. Well, training you always put in the income statement the year it happened, so that won't be put in until 2011. Trading losses from the 1st of July to the end of our year are expected to be 600,000. Okay, so we would show the losses of 600,000. Not in discontinued though, in continuing, because it hasn't discontinued yet. And from this date to the closure, a further 1 million. Well, the further 1 million losses will be shown next year. You can't provide for next year's losses. So that's pretty much 2010 done. What about 2011 then? 2011 is when it becomes discontinued. So you would show their figures in the discontinued column. I think you had mentioned that. You would put the training as an expense in. The increase in the value of the factory, so the factory sale profits, profit on disposal would go in here, into the discontinued column. Okay, and obviously you would show the losses until disposal. And I think that's pretty much everything that we've done there. Okay, that's how you answer that question.